Mortgage rates jumping to their highest level since the 2008 financial crisis. The average rate on a 30-year fix now 6.7%, according to Freddie Mac, more than doubling from 3% just 1 year ago. So what's ahead for the housing market? We're joined now by Realtor.com manager of economic research, George Rashu. George, nice to see you. You have separate housing data out today. We're going to get to that in a moment, but let's start with these rates. With continuing Fed tightening, where do you believe rates are headed, and how severe do you expect the impact to be on home values?
Dave, that is the question of the season. When you look at mortgage rates, even a month ago, we would not have expected we'd see anything within a 7% range. And yet, here we are very close. What that really means when you put numbers to paper is that for the typical buyer, someone who's on a median household income of about $71,000 and putting a 20% down on a median priced home at 3%, they would have over $107,000 more. So put it another way, the buyer today in September of a medium priced home lost about $100,000 in purchasing power. That's tremendous. When you juxtapose on top of that the fact that home prices are still rising compared to a year ago, though they are finally backing off peak, and you throw in the fact that inflation is eroding most people's incomes, you have an affordability crisis, which is making it really challenging. And with the Fed, to your point, committed fully to bringing inflation down here to 2%, I am not surprised to see rates moving within 7%, and very likely before the end of the year, we could see even mid-sevens.
And so what sort of trends are you seeing in terms of inventory and the changes there?
Rochelle, what we're seeing at Realtor.com, looking at the inventory picture, is number one, a significant improvement. Most of it, mind you, borne out by the significant drop-off in demand. However, active inventory is up from a year ago, and homes are spending longer on the market. That, in a sense, is really good news. It's showing market is moving back towards balance. At the same time, worryingly, as we go into the colder months of the year, and a lot of homeowners are beginning to get worried they missed the peak, we're seeing new listings pull back. So just at the time when we need supply to increase, we're seeing some of that supply shrink, and that's still keeping upward pressure on prices for the time being.
George, you mentioned the fact that homes are sitting on the market for longer. How long is a typical home on the market? And I guess, how does that compare to those pre-pandemic times?
So in many respects, we're looking at roughly, around the 40-day mark right now. Pre-pandemic, we would normally expect the home to be on the market somewhere closer to 60 days, right? Somewhere between 2 and 3 months would be more of a balanced market. So we're still a ways off from that point. The encouraging factor here is the fact that we're seeing a lot of sellers still trying to make a go at it. But for buyers, the real challenge is their incomes and that their ability to borrow are really being curtailed. And in effect, what the market is doing is pretty much following what the Federal Reserve has said. I mean, we heard Chairman Powell at the last meeting of the FOMC say that housing needs a correction. And if anything, we're seeing that actually take place in real estate markets right now.
Yeah, and that statement from Powell raising a lot of questions. Do you think the Fed can bring home values back to, or seeks to bring home values back to 2019, 2020 levels?
That's a great question, Dave. And I don't think the Fed has a particular target in mind, like they do with inflation. However, I do see it from at least the remarks, Powell's remarks. He pointed out that people today can not really afford to purchase a home. And for many first-time home buyers, that's absolutely the case. So from my perspective, I see at least having homes price-wise move sideways as a real benefit as long as incomes keep rising. If, however, inflation lasts longer into next year than the Fed anticipates, that could further erode purchasing power. And that's even before we discuss any economic outlook, a potential recession, or labor market, which is still very strong, slowing down at some point next year.
And George, just quickly, because I know in the suburbs, I've started to see home prices coming down, but what about the top 10 metro areas? What are you seeing there?
In the top 10, at least by size, we're still seeing activity fairly brisk. In fact, when we look at our top 50 metros, we're only seeing a couple of them with actual price declines year over year. The others, it's the combination of, number one, the fact that we are still in a tight inventory situation. Yes, it's improving, but it's nowhere near historical markets. Second, we're still seeing buyers interested in purchasing. The truth is, with changing stages of life, with changing life circumstances, transactions will continue. People will retire, people will change jobs, people will have children and need a bigger home. So we're still seeing buyers in the market. It's just that right now, the only ones that can afford are either repeat buyers who have a lot of equity, folks with cash, think here retirees selling in a high cost area, moving somewhere more affordable, or people with higher incomes. And for those outside of those groups, it's a much more challenging environment.
George Ritu, thanks so much for taking the time to talk to us. Great to have you.
Wow.
Shifting gears now to
Great stuff. That really says a lot, doesn't it?
Boy, that's a lot packed into a 6-minute video.
Right. Right.
And ironically, the first thing I think about when I watch that is the potential confirmation bias, depending on which side of the aisle you're on.
Mm-hmm.
You can listen to that and hear a bunch of negative stuff. You can listen to that and hear a bunch of positive stuff.
Right.
Based on what you want to hear.
Right.
I will say that affordability has been an issue for a long time, not just recently.
Right.
Rates being high hurts that.
Right.
But the potential buyers are still out there. There are still multiple offers. There are still prices going up. All of this is happening at the same time.
Mm-hmm.
As rates are pulling up, over 7.
Mm-hmm.
They've moved up the last 3 days.
Right.
So, gosh, metros are still staying strong. One of the interesting things there, the topic of it's a sit and wait market is, and I haven't heard it specifically said the way he said it, but sellers feel like they missed the high point. So they're just going, I'm gonna wait. I'm not gonna sell.
Yeah. Well, right. We still have the visions of 2021, 2020. Nobody wants to admit, from a seller's side, that the prices are lowering. They stubbornly want to hold on.
Well, the sit and wait is it's not uncommon.
Yeah.
It's not uncommon. I've had this feeling about the market before. This condition has existed before. It's a standoff between buyers and sellers to see who's going to concede first. Are more buyers going to jump in?
Right.
Or are more sellers going to be forced to sell?
Mm-hmm.
And both happen. Again, we evaluate the market as balanced right now, but still low inventory. And it's a mixed bag on what's going up and what's going down in price.
Yeah. Well, the other thing that I've heard is the idea of people looking for smaller houses now as well, and trying to make things work with the smaller house. And we just had that happen today, in fact, right? We have some people looking at a smaller place.
Yeah.
Just doesn't make sense.
We're adaptable as humans. Sometimes that's based on adjusting your expectations and making it work for you. And increase in prices will make force some people to adapt.
Right. Well, let's take a look at what they were talking about in terms of the mortgage rates. So here is Mortgage News Daily And sure enough, there we are today, right above 7. It looks like 7.12%. Yesterday, 7.04. And then the day before, 6.95. So last 3 days going up.
Yeah.
Yep. And then the other thing I wanted to show was the Fear and Greed Index. I think we kind of probably know where it is, but it was at fear last time we looked at this. Now it's extreme fear. And now this is talking about the stock market. But, they go hand in hand with real estate. So
Is this a day-to-day or active?
it is.
In a moment.
So if we see S&P 500 and its 125-day moving average market momentum, last updated October 7th, 5:20 p.m.
Yeah.
Yeah.
So that's to the moment almost.
Yeah.
2 minutes off.
Yeah.
And the stock market was down 600 points today.
Yeah.
But it's been going through these huge volatile swings. Go up 600 points on Monday.
Yeah. So there you go. Wait and see. That's kind of what a lot of us are doing. Do you think we'll get more direction once fall comes and we see what the Fed is going to do in November at the next? I think it's November. Do you think we'll get any more direction in this end of the year?
No.
No.
I think the Fed could put more downward pressure if they do another big increase. Rates we're at low sevens. If we spike up to high sevens, it's going to have a negative effect on the market.
Yeah.
But it's such an emotional response that if they don't do a increase, we might get momentary reversal until the next meeting.
Yeah.
It's really volatile.
Yeah.
Exactly.
Wow. All right. Well, one of the things, Darren, you're reminding me of a conversation we had a couple weeks ago. During these times, for Darren and myself, we were talking about, the message to buyers, the message to sellers, and we always remain, I think, correct me if I'm wrong, we always remain optimistic, even through the worst times. That really becomes kind of our way to survive in such a tough job like real estate. But, it really gets down to what you're looking for and what you need. There's some people with much better strengths now in this horrible market, and we want to work with everyone individually. So as much as we paint some big broad pieces of news here, we want to be fair and we want to be valuable to both buyers and sellers at this crazy time.
And I think that was the conversation, and thanks for remembering and bringing that up.
Yeah.
Was kind of dividing a response to both buyers and sellers.
Yeah.
There's good and bad, as you just said, on both sides. And often when we speak, if we're trying to speak to the general audience, we're trying to deliver a little more of a neutral position. But when we speak directly with buyers or sellers, in their case, we're honed in on giving them the best advice possible.
Right.